Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet on July 6th, a Thursday. As you can see, we are very bearish right now. From about 7:30 AM Eastern Time to the 10 o'clock hour right here, it is very bearish. Okay, so I'm going to zoom in on this area here, and that's the 10 o'clock Silver Bullet time. So let's move this like this. Let's just zoom in here and let's just look at what's going on with these candles right here. Now, yes, I have this on like this because I want to show you how you could be trading this environment. Now, normally I like to see a higher time frame liquidity to be taken and then a break of market structure, so a market structure shift with this that has displacement, like a fair value gap, trade into the fair value gap, and I take my trade, risk 1 to 2, and target a high, right? Well, what do you do when you're in a trending environment? Well, I'll tell you. Okay, you want to see swing highs get broken for a reversal. Otherwise, you're still trending. So right now we've been trending bearishly. So for when we start it right here, it'd be this candle. When this candle opens, that would be the high right now. So when this price is coming down, I don't want to see this high being broken for a market structure shift to go long. So if this isn't broken, I'm still bearish. Okay, so as this price comes down, we see a volume imbalance here, we see a volume imbalance here. So how do we trade this? Well, what I do in trending environments is I put my fib from high to low when it starts pulling back. So it came down here, and then it started pulling back up. Well, I want to see how far of a retracement are we going to get? Are we going to get into optimal trade entry zone? I don't like using the word zone, but from the 0.62 to the 0.79, somewhere in there is optimal trade entry, is good entries, right? So 0.705 is OTE. What ICT likes, it's in this range, okay? So anywhere in here, we can take a trade. So when price came up here, this high has not been broken. I'm taking a trade there, and I'm marking it on this 0.62, and I'm putting my stop above the swing high, right? I'm going for a risk for 1 to 2, so whatever this is, it's 8.5 handles right now. So there you go. It works out just fine. Okay, so then our newest swing high is this one right here. Okay, let me take this short position off since we have the arrow. We have this new swing high. So now for a market structure shift, I need that to be broken. Price comes down, starts retracing a little bit. What do? What do we see? We see a fair value gap. But we pull our fib from here to here. Let me take the first fib off. From here, from swing high to swing low, it comes back up. We're in equilibrium, is right here at 50%. Anything above 50% is premium. Anything below is discount. It doesn't quite hit the optimal trade entry area, but we do have a fair value gap that is in premium to go short. So again, we can take a trade, put our trade right there. It's at equilibrium, so we're in a premium when we get in our trade. Our stop goes above the high and risk 1 to 2. So we get it again right there. Actually, both of our positions exit right there. Okay, so I'm going to take the positions off and the fib off so it's easier to see. So now we've come right here. We've used our fib tool to get in an optimal trade entry for the first one. And then for here, we're in premium to go short, which is great. This is exactly what we want to do. So now we're looking at that swing high. Has it been broken? No. Then we come close and we get this swing high. Is this swing high broken for a market structure shift? No. Do we see anything else? We see a fair value gap here. Okay, let's pull our fib from high to low. Where does price come back up? Optimal, and where the candles bodies stop. They stop at optimal trade entry. So we can take a short. We can go when it goes in at 0.62. We get in, our stop goes 1 tick above the high, and we aim for 1 to 2. So we're another 5 handles. And where does it end? It ends right here, 5 handles. So there's 3 trades using the Fibonacci tool. Optimal trade entry here, optimal trade entry here, premium discount, premium trade here. Still using the Fib tool. Let me pull that off too so it's not confusing. Now what happens when you eventually get down to where it's going to actually reverse, right? At some point, if you keep in a trending environment, it's going to reverse. Consolidate and then reverse, but you're going to have that point where it's not going to come to OTE and then get your target. Well, let's continue on. Let's keep going. I know this is past the hour, but I know I was going to get a question like that, so let's just keep going on. That was where we're at. Right there is where we ended. Okay. So now we pull our fib from high to low, right? And where does it come into? It comes into right about optimal trade entry, right? So we could get long or get short there, right at 62%. Stop goes above the high. We aim 1 to 2, and 2's right here. Well, it comes down and it doesn't take us out, right? If you've watched any more of my videos, I'm a big fan of partials and moving my stop to break even. Mostly because I trade on Apex funding and I have to manage my trailing drawdown so that way we can pass our challenges, right? And keep our funded accounts. So when I go into 60%, or a break of structure or swing high or low is taken out, I move my stop to break even and I take a partial. I always trade at least 2 contracts, so I take one off and then I let one go to full target or let it keep going in the direction and keep moving my stop. Either way, on this one, we would have taken a partial and stop would have been broke even and then we would have been taken out up here. Okay, so now this is a break even trade. That's clue number 1. We have a break-even trade. We don't hit our TP target, okay? So now we have to look at what structure is doing. Well, as price comes up here, it took us out right here, right? On this next trade, let me pull this fib off here. Well, then what do we see? Well, we see this is a market structure shift, right? This is the swing high that created the new low. So when that gets broken to the upside, I'm looking for displacement. I'm looking for reasons to go long at that point, right? Well, I see a fair value gap right here. I see a volume imbalance right there. And I see another fair value gap right there. And where does this candle, this wick, go all the way through to the tick to the second fair value gap, right? What do I always say? When there's 2, I always go off the top, the furthest one, this one. Right? Because you know if you have your stop up here or place your order here, your stop has to be below that. So you might as well get in. If you don't get in the trade, you don't get in the trade. You can get in up here. It's fine. So that came in. You could put take your trade here. Stop goes. I go 1 tick below the low. Aim for 1 to 2. There's 4 handles. You can go for your 5 right here, and it'd be right there. And then you can start trailing up, looking for order blocks supporting price all the way back up. Okay, but that's how you could have traded the silver bullet session on Thursday when there wasn't a liquidity sweep with a reversal. Okay, so there was no change of structure. To recap, we look at our swing highs and they're waiting for them to be taken out. And they're not taken out. There's one here, there's one here. This one actually does get taken out, so now we're on market structure shift, and that's when we're going up. But when we're over here, we're pulling our fib from high to low in a trending environment and getting in at OTE, or in a premium range, which was this one. OTE over here, and then over here would have been OTE, and we would have broke even managing our trade. So those are your 3 silver bullet trades for July 6th.